Hello and welcome to Mining Network. I'm joined today by Philip Newman, London Managing Director, and Adam Webb, Director of Mine Supply over at Metal Focus. Thank you, first of all, both of you for coming onto the programme. So the Silver Institute recently announced a press release stating that the outlook for silver demand is exceptionally promising for 2022, with global silver demand forecast to rise to a record of 1.112 billion ounces. Before we move on to the driver for the increase in 2021, or 2022, I should say, can you set the scene over the past couple of years in relation to the silver price, especially in regard to how demand, supply and the pricing has been affected over the last few years and what we've been seeing in the markets?
Yeah, thanks, Peter. Maybe I'll start with the supply side, given that's my area of expertise, mine supply. So basically, to set the context of what happened last year and what we're expecting this year, it's basically looking at what happened in 2020 with COVID. So the situation in 2020 was obviously the COVID pandemic began and a lot of countries went into these lockdowns. And what that meant for some countries, and particularly some major silver producing countries, that was that the mining industry had to essentially shut down mostly for extended periods of time. So for instance, it began in China, which is the third biggest silver producer, and mines there were shut more or less for January and then began ramping up towards full-scale production. But more importantly was actually the biggest silver producer, Mexico, and then the second biggest, Peru, along with other big producers, particularly in South America, that those mines were shut down throughout kind of Q2 for extended periods of time. And obviously that really impacted production in 2020. So that led to a contraction in mine supply of silver for those reasons. And that was down to around 780 million ounces. So it's roughly a 7% drop compared to the previous year. And then what we saw in 2021 was a recovery from that. The pandemic is obviously still ongoing, but mines were largely able to implement procedures to control the spread of the virus, protect their workforces. So for instance, quarantine measures at mine sites, testing, all this kind of stuff. And then obviously the global vaccine rollout. So what we saw last year was there was still disruption from COVID, but it was more at individual mine sites where perhaps there was a localized outbreak of the virus and they may have had to stop at an individual mine for a short period of time. But we didn't see the kind of country level or regional level shutdowns that we saw in 2020. So for that reason, mine supply rebounded to similar levels that we saw in 2019, slightly lower, but there was almost a return to those kind of levels. So that kind of sets the scene, I think, on the supply side for what happened last year.
And if I look at the demand side, obviously there was a palpable hit in 2020, the height of COVID, of course. So you did see global demand in 2020 fall below 900 million ounces, which was the first time in Metal's Focus series that we produced for the Silver Institute that had happened. And our series goes back to 2010. But what was interesting, though, is that within that, there were some quite divergent performances. So even for industrial demand, as affected as that was, it was really those losses were concentrated in the early part of the year. For example, one of the key areas there, the photovoltaic market, actually started to come back towards the end of 2020. And so even though you had, as I said, industrial demand weakening in 2020, it didn't fall that dramatically. Contrast that with someone like jewelry and silverware. As you can imagine, the hits to disposable incomes, quite a palpable decline. So you fell from just over 260 million ounces in 2019 to around the 180 million ounce mark in 2020. And someone like physical investment, again, quite a different one. Retail investors is responding to that, a lot of that uncertainty, and so performing quite nicely. And then coming into last year, 2021, that positive momentum for industrial demand really continuing, and that achieved a record high at that time in terms of our series. And that was joined by a very strong recovery duly in silverware and further upside in physical investment as well. And so you were not only getting back over 1 billion ounces in 2021, but from a global point of view, you're more than making up for the losses that you suffered the year before. And so to put that into perspective, the last time we were over 1 billion ounces from a global point of view, from global demand, was back in 2015. So that, I think, really sort of sets the scene in a nutshell, I'd suggest.
I'll stick with you for a bit, Philip, if that's okay. Just on the demand side, obviously, I think from the Silver Institute, which you guys are the brains behind, from what I understand, in terms of the research that goes into the reports that they do. I believe there's around an 8% shift in demand projected for 2022. Where's most of this demand predominantly coming from? And is the breakup of the market in terms of industrials and bullion and silverware, is that still around the 50-50 mark in terms of where demand for silver is coming from? Give or take, yes. And when we think about the year on years for 22 versus 21 on the demand side, I've got to say though, it's pretty evenly split in terms of the ounce increase. So if you look at the growth of industrial, jewelry and silverware, and also physical investment, and physical investment is what we call coin and bar demand. And although in percentage terms, they will achieve different increases, but from an ounce point of view, it is pretty similar across all three. So for industrial demand, you've got continued growth on the PV, the photovoltaic side, and then you add to that the eventual recovery from an automotive perspective. And of course, as I'm sure you know, if you think about the impact of the chip shortage, it's really been the car market where that has been, I think, most keenly felt. Whereas we think about, especially from 21, but also continuing this year, albeit to a lesser extent, you think about the working from home, and therefore, people going out and buying that electronic kit that they need to make that possible. And that certainly gave quite a nice boost to last year, for example. And just quickly, can you just quickly run through the highlight figures of where the demand's coming from in 2022, or what the forecasts are? Sure. And of course, when we produced World Silver Survey 2022 for the Silver Institute, and that will come out, I think, around April 20th. We've got a launch in New York. Actually, myself and Adam are speaking at that. There will be revised figures, I should say, for 21 and also for 22 as well. So please do watch out for that. So these are currently estimates even for last year as we get out and conduct sort of our field research. So we're looking at, for industrial demand, around 524 for last year and just over 550 for this year. Jewelry and silverware, which is we present as a combined category, just over 210 for last year and around a 240 mark for 22. And then for physical investment, just over 260 last year, plays 290 for this year. And just to complete the demand side, we've got photography, which is pretty stable at around the 29, 28 million ounce mark. Brilliant, thank you. And moving on to Adam, if you don't mind, just to address some of the supply deficit. I think I was reading in the report, this is the first year in 6 years, was last year. So 2021 was the first year in 6 years that the market experienced a supply deficit. What's the amount in million ounces in terms of the deficit from last year in comparison to the forecast for 2022? And what's the main reason behind the supply issues? Is it purely a consequence of demand, or are there other factors going on in the supply chain?
So on the supply side, it's obviously the price is dictated by the supply-demand balance, but the changes in supply are not directly influenced by the demand side. So it's different drivers. So the rise in demand last year, as I said, was a factor of the recovery from COVID's-19 disruption the previous year. But the silver price at the moment is, well, today it was floating around $24 an ounce. Now, if you look at the cost of production, the average all-in sustaining cost for primary silver mines in Q3 last year, so that's the latest data, Q4 reports are still coming out, was around $12 an ounce. So just looking at that average compared to the silver price, you can see that the majority of silver producing mines are profitable. So there's not that downward pressure from price to close mines, for instance. So we're not seeing mines coming out of production because they're no longer profitable, which we did see a bit previously in kind of 2018, 2019 when the price was lower. And those higher prices do incentivize project development. But I think the key thing to understand on the supply side, in terms of developing a mine, it takes years to build a mine. So the miners can't just switch on and switch off production to fit with what's going on with prices. It's more about long-term planning. But what we're expecting this year is for continued growth in mine supply. And that is separate to the COVID recovery we saw last year. We're expecting around a 7% increase again. And that's driven by some new projects coming online, particularly Juanicipio in Mexico, which is a joint venture between Fresnillo and Mag Silver. There's a project in Russia, which is primarily a copper mine called Udican, but it's going to produce a lot of silver as well. And then we have La Cuapa in Chile, which is primarily a gold mine, but it's going to produce a lot of silver. And the thing to remember with silver mine supply is that only 27% actually comes from silver mines. The rest is coming as a byproduct of mines which are primarily producing things like copper, lead, zinc, and gold. So there's going to be growth from these new projects, but also from existing projects. For instance, the giant Grasberg mine in Indonesia, which is primarily copper, produces a lot of gold as well. That's gone through a phase of switching from a combination of open pit and underground mining to a wholly underground block cave mining operation. And that's slowly ramping up year on year. And that's going to continue on that path this year. And that will produce a lot more silver in conjunction with the copper and gold. So that hopefully paints a picture from the supply side. Philip, I don't know if you want to comment on the kind of deficit side of things.
Sure. Thanks, Adam. Yeah, so I think when we look at the deltas for last year and this year, it goes without saying that the upside in demand is obviously outstripping the growth on the supply side. On the supply side, it's overwhelmingly coming from mine production. The changes on recycling are pretty modest. And for demand, I mean, as I said, last year, you had significant gains in every category and a slight upside in photography as well. Hence why you had growth in total supply of only 50 million ounces, played against a 137 increase in demand. This year, there's more growth on the supply side, plus 70, but still strong gains on demand of just around 80. And so you can see how we are moving to that deficit. But the deficits are still very modest. We've got to put that into perspective. So last year's estimate, and I do stress these are estimates, of around 7 million ounces. You put that against global demand of over 1 billion ounces. So I think why this is important in terms of from a structural point of view and a change in the market. And those people on watching this who subscribe to our 5-year will know that we're seeing that deficit continuing. But even for 2022, a deficit of 20 million ounces is still extremely modest against total demand. So again, it's interesting from a sentiment and how the market's moving, but in terms of its impact on price, I don't think yet that's having, it's not really playing out just yet.
One of the things I did notice towards the end of the Silver Institute's report was that you've actually forecast the price of silver average in 2022 1% less than 2021. So you're looking at around $24.80. Given that the supply deficit, I know it's in terms of the general market, it's still quite small, but we are in a second year of supply deficit. It is really increasing from 7 to 20 million ounces. What's the rationale behind a lower silver price in 2022, or average price that you guys were thinking?
Sure. Well, I think, again, you've got to put it in context that, as I said, you've got combined deficit of 2 years of, less than 30 million ounces. And even, yes, you've had a period of structural surpluses, but even in 1 year, 2020, you had a surplus of 80 million ounces. So that's why, as I said, it's important in terms of how the market's developing and changing, but also why it's not having a price, impact on prices. But I think we've also got to take a step back and look at the upside we've seen. It was only back in 2019 when the price averaged just over $16. And then you see how that's strengthened. So 2020 over $20 and 2021 over $25. So you see that strength that has really not only been the upside in 2020, but the fact that it's built on that. And then, although, yes, you're absolutely right, we are looking currently of a slight slippage in terms of the annual average this year, but, taking a step back and the fact it's maintaining around a $24, $25 average, I think is quite a noteworthy performance. And if we dig a little bit into that, a lot of that does relate to what's happening in the gold market as well, and how institutional or professional investors are looking at the market. And, when we put this together, this was really before, yes, there was certainly things were building in, on between Russia and Ukraine, no doubt about that. That was certainly a factor. But of course, things have rapidly escalated over the past 24 hours as well. But it's very difficult, though, when one looks at these kind of events. You can have, or you certainly have, investors moving into safe havens, be it gold and or silver. But often you can have a knee-jerk reaction, and then quickly prices can fall back. And so, from our point of view, what's more important is looking at, say, for example, what the Fed is doing with its interest rates, what expectations are for the Fed, and current and future expectations for inflation as well. So we think these would be much more important drivers of prices this year. And so when we try to break down our forecast within this year, we think that yes, of course, what looks nailed on is an interest rate lift by the Fed next month. But we do think that the markets have perhaps got a little bit ahead of themselves in terms of how quickly rates will initially rise. And so we think as markets adjust to perhaps a lower initial pace of interest rate increases, that should benefit precious metals. But we then think that the Fed may come back into the market in the back end of this year. And so we could see a slightly softer tone to prices over, say, the final 4 or 5 months of the year, whatever it may be. And so I'm trying to avoid using a sporting analogy of game of two halves, but I think it could be that sort of scenario. So initial strength giving way to investor liquidations in the back end of this year, and therefore a softer tone as we move through towards latter part of Q3 and Q4 as well.
One of my questions was actually going to be on whether or not monetary policy or geopolitical events have more an impact on demand and supply in this market, because it's not like other commodity markets with precious metals, is it really? Even though it is 50% industrial, you always do have a lot of influence from the geopolitical side. But it sounds as though this year in particular, you're estimating that the geopolitical and monetary policy will have more of an impact on silver price than the deficit that we're seeing at the moment, from what you were saying there, by the sounds of it.
Yes, I think that's fair. But what was really interesting last year, especially the early parts of last year, when there was a lot of focus on green technologies, we certainly saw this in the platinum market in the context of hydrogen. And for silver, there was suddenly a lot of interest in the solar or the photovoltaic market, and that certainly provided the boost. What was interesting though is that PV is a pretty mature market. There's certainly growth coming through, but it's a pretty mature market. I mean, it's consuming over 100 million ounces by itself, and so you can have those dynamics playing out. That, as well as what else is coming in from a monetary point of view, that investors, that focus can certainly, drill down and see what's happening, especially in the industrial market. And then, of course, we think about the early part of last year, in January, Feb, with the Reddit craze happening. That drive to come into silver, be it the ETF space, mining equities, or the coin and bar. And I think that certainly provided, again, renewed focus. And while that was, overwhelmingly retail investment, I'm sure that may have, again, encouraged perhaps institutional investors to look at silver as well.
Just a quick one, just to finish up. Does Metal Focus look at longer term outlooks of silver? You were talking about there some of this green transition and how that's having a bit of an impact on the silver demand fundamentals. Obviously, we've done our discussions with Benchmark, and you see, especially with EVs, that sort of these hockey stick graphs where things are projected to really take off, and they already have in certain commodities like lithium. Are we expecting similar things with silver, given its connections to the electronics and the renewable energy sector?
So in terms of the work that we put out there, we do short and long dated forecasts now. So we produce a 5-year forecast, across the precious metals, which we update 4 times a year. So what we're trying to do there is look at the big picture themes. Myself on the demand side, and Adam, of course, on the mining side. So from the demand side, yes, we do a lot of work in terms of the automotive space, transitioning from a traditional quote unquote, internal combustion engine through to hybrids, and then of course through to BEV as well. And frankly, all of those are positive for silver. It's exceptionally difficult to estimate loadings. Silver loadings in cars, but we do believe that it is ramping up as you move through those technologies. So I think that's certainly one of the exciting areas. And something we saw last year away from the automotive space is the growth in 5G, not only in terms of the infrastructure needed for 5G, but what that means in terms of supporting industries. So I think that's another exciting area as well.
Adam, actually, might just finish with you if that's okay. Looking a bit further afield, what's the supply forecast like? You were talking about Montecipio and a few other players who are coming online recently or expanding. What's the pipeline looking like for silver over the next couple of years? Are we expecting a large influx of new production?
So we are expecting continued growth over the next few years, basically up until 2024, before it then starts to pull back. So that will come from a number of projects. Some I've mentioned. Other ones include Solaris Norte, which again is in Chile. It's a gold mine, but high silver. There's a number of other projects, and Grasberg will continue to ramp up. As I mentioned, I think interestingly, talking about new technology as well, and the kind of move to renewable energy and EVs, you are seeing the miners increasingly focused on ESG. It's always been an important part of mining in order for these companies to maintain what they call their social license to operate. But increasingly, there's moves towards renewable energies on site, so solar panels, for instance, battery-powered equipment to lower those greenhouse gas emissions associated with the companies. And that will continue. That will obviously have associated capital costs with it. But that's going to happen. That's not limited to silver as well. That goes across all the commodities. So that's an interesting trend to keep an eye on from the supply side. It won't directly impact supply numbers, I don't think, in terms of production, but certainly there'll be an impact on costs, particularly capital expenditure.
There's a lot of new technologies coming forward at the moment in terms of better recovery rates at lower grades. Have you seen anything new in silver that I know there's a lot in copper and palladium that are coming through at the moment that look promising?
Nothing specific to silver that's I've seen that's wide scale, widespread. Obviously, miners are always looking to maximize their recoveries, because the better recoveries they can get, the more metal they can recover and maximize their revenues. So naturally, every miner is continuing to push for better recoveries, but there's no breakthrough technology in the silver space, particularly that I've seen. But as I said, miners are naturally looking to maximize those recoveries, as always.
Brilliant. Well, Philip, Adam, thank you so much for your time today. We'll be adding a couple of links in the description below for those who are watching, so you can check out some of the forecasts in a bit more detail as well. But yeah, gentlemen, it's been a pleasure. Thank you.